Okay, folks, welcome to Best Stock Charts for the coming week. Members, we're going to immediately following our review of the stocks, we're going to look to trade this coming week. We're going to segue into the week ahead commentary, and we'll kick things off with a deeper dive into the symbols that I'm going to go over on Best Stock Charts in greater detail. Then we're going to segue into Market Pulse Check, which is where we review the health of the overall market, where we think the markets are going in the coming week, and then we'll finish off with a review of our current positions. Now, members, I'll be doing members stock chart requests, which is where I review the symbols that our gold members submit for me to review on video tomorrow morning on Stock Charts Today, where I go over the pre-market activity of the markets, and I'll be doing that on Mondays, Wednesday, and Friday mornings. So a revised schedule. Stock Charts Today will be on Monday mornings, Wednesday mornings, and Friday mornings. Let's get to the symbols that we're looking to trade this coming week. First stock up, SHAK. We booked profits on SHAK last week. We did a quick swing trade on this breakout. We booked profits. Thank goodness that we did, because we pulled back. This is a daily chart. I'm going to go over the daily chart, which is a continuation breakout pattern with members on the week ahead commentary. First, let's talk about the weekly chart on Best Stock Charts, where we want to identify the macro reason why we're interested in SHAK. It has formed a multi-year base. We are beginning to form the right side of a cup formation. We cleared resistance last week. Next price target that I have on SHAK is $68 per share. So we have a known stop point, whereas we close back down below the support level here. We stop out, keeping our loss small, and we have a reasonable upside profit potential. So members, more to come on the weekend commentary. Next chart up is CRON Group, weekly chart. We are in a nice flag formation. Last week we flashed a bullish key reversal. Stokes are hooking up. We have a double bottom setup on RSI. It is also hooking up. Good volume last week. So we have institutional demand. A nice double bottom setup on Williams percentage R. So the stars are in alignment here on CRON. The question is, when do we pull the trigger? Members, will talk more about strategy on the week ahead commentary. Next chart up, New Skin Enterprises, weekly chart. Now, we broke out back here the week of May the 21st. We saw a continuation breakout pattern last week. I think we're going up to $86.13 per share. That's about a $3 spread from where we closed. So members will be talking more about an entry point on the week ahead commentary. RSI is rising. Stokes are rising. Volume could be better. If there's something that I had to say was a concern, it is volume. Volume needs to pick up some. The next chart up, Lululemon. This is actually going to be a short trade. And you may be saying, Bob, weren't you recently bullish on Lululemon? Absolutely right. Here's what I had to say last about Lululemon. Lululemon, weekly chart. We've been watching Lululemon for quite some time. I've been waiting for the breakout above this upper band of resistance. We attempted it about 3 weeks ago. No go. We are pulling back in an orderly fashion. I think we're breaking out fairly soon, especially if we get a federal. So we were looking for the breakout on Lululemon back here. We got the breakout. We've had a heck of a run. Now it's time to look for the exit door. Now, this is an IBD darling, Investors Business Daily darling. So I have no doubt about it. There are still more legs to go here on this chart. Take a look at your RSI on a daily basis, 87.53. We can see RSI 90. Now, what should be concerning is that you have the shares trading above the 3 standard deviation Bollinger Band in red. In short, it's not supposed to be there. That does not mean it's going to drop like a rock. I think that it's entirely possible to scalp a swing trade off of a filling of the gap at the, let's call it 108 level. So members, more to come on Lululemon. The next chart up, Kohl's. This was a stock chart request by fellow member Rakesh. He posted this in the forum as a long trade a few weeks ago, and I watched it myself, and I've spoken about it a bunch of times. As a matter of fact, here's what I had to say last about Kohl's Corp. Kohl's. This stock is actually a recommendation from one of our members, Rakesh, and he posted this in the forum, and he wanted some thoughts on it, and I was thumbs up all the way. I love this setup. Talk about the mother of bull flag setups here on a weekly basis. We have topping action above, no doubt, but I'm looking at a stock that, you know what, if you wanted to scratch the itch, you could scratch the itch. Buy a few shares, then add more on a breakout. Use a stop right down below this support level here. Daily chart, a beautiful setup here. We have the 50-day moving average, which was flat. It is now rising. An orderly pullback on light volume. I think we're breaking out very soon on Kohl's. I'm bullish on Kohl's. I am not usually bullish on retail names, but Costco, Kohl's, bullish on, looking good. JCPenney, avoid like the plague. Okay, so fast forward. Here we are. We've now broken out of this flag formation. The weekly chart is looking good. Members, we're going to drill down to a daily chart, and we'll review when the best risk-to-reward entry point is for Kohl's Corp. Next chart up, Canada Goose Holdings. We booked profits on this one a couple of weeks ago. Last week, we had a bullish engulfing of the prior week's move, a new all-time high. Stokes are rising, RSI is rising, volume a bit below average, but okay. We have no overhead supply, meaning no resistance to get through. So we can put less emphasis on the fact that we don't have rising volume, given the fact that we have no overhead supply or resistance. Members will talk more about the daily chart in a moment. Another extreme oversold trade we're looking to put on. We'll go over the daily chart. And this is EchoStar Holdings with members. I'm going to go over either the weekly or monthly chart where we'll identify where there is historical support. When you're trading extreme oversold trades, you must understand where you have historical support. That's what separates you from a trader who is catching a falling knife and one that is acting methodically and deliberately. So we have RSI at current at 19.77. We were lower, so it barely makes it onto our screener. The Stokes are like a coiled spring. Good price action last week, meaning that we found a bottom on Thursday, and while we did put in a new weekly low on Friday, we reversed to close off the lows of the week. Is this the bottom? We don't know yet. We need to first take a look at the weekly and monthly charts and identify whether or not we are at historical support or if there's a stronger support level down below. Now, volume on Friday rose to slightly above average, which is good. So I wouldn't be the least bit surprised to see us rally off of these levels. The probability of us being involved with the shares on Monday, if we are not at historical support, is very unlikely. And the probability of us chasing the shares, if they do rally on Monday, is close to zero. Because what I truly pound the table on with members when I trade extreme oversold stocks is that weak stocks tend to get weaker and strong stocks tend to get stronger. Do not underestimate them. If the price does not come to you, you must walk away from the trade. That is the difference between those who catch falling knives and those who act deliberately. ABEV, I went over ABEV several weeks ago back here when it was at extreme oversold levels. We were up here, and I said, in all probability, we're going lower. As a matter of fact, here's what I had to say about ABEV when I last reviewed it. So, first chart up, weekly chart, ABEV. Let's go to the daily chart first, actually. Daily chart, RSI at 15.89. Now, we did bounce on Friday. While it was a down day, We did bounce off the lows of the day, and there was support there going back to July of 2017. Now, could Friday have been the bottom? Sure, but this is not oversold enough for me. Besides the fact we still have massive selling, massive institutional distribution of the shares. I'm not going to fight these guys. This is not mom and pop selling 100 shares. That's not how these volume bars are created. You have rising sequential down volume bars in the millions. Again, not mom and pop selling 100 shares. We have the 50-period moving average, which is declining. It will take out the 200-day moving average, absent an act of God, which, were to occur tomorrow, means nothing. It's already priced in. Now, if the shares rally off of support, which they just may, meaning Friday's lows, well then, expect a sell-off when this rollover, when this negative divergence occurs. But what we're looking for, you're not going to find on a daily chart. You need to pull back to a weekly chart. We're looking for support down here. This is our ideal buy point, the lows of June of 2017. And I think that we could get there. Look at this volume last week and the week prior, huge. So let's not fight the institutions. They will win. Allow the shares to come to us. Why is it important for us to wait for this green line to get tagged? The reason is that we know through history that this support level has proven here in March of 17, has proven here in June of 16, has proven here in December of 14. There are buyers down there waiting in reserve to help with our bid. Those are the guys that will keep a bid, a floor under our buy point. And if it fails, if it breaks down below that support level, we're out. More to come on ABEV. Now you can see that obviously we did break down to new lower lows. The question is, have we hit a bottom yet? We'll review the weekly and monthly charts with members on the week ahead commentary. But I think we are very close to pulling the trigger on ABEV. RSI at current is at 21.15. We have the 50-day moving average, which has already crossed down below the 200-day moving average. Would I be a buyer where we closed on Friday? No way. I would not chase the stock. Volume on Friday was good. It was well above average. MACD, very mature, poised to go positive. So ABEV looking good as a long trade. Members, more to come on a good risk to reward entry point. Another stock that I went over a couple of weeks ago was America Mobile as an extreme oversold trade. We continue to make lower lows. We did not execute a trade. Now, we did reverse last Thursday and Friday. We followed through to the upside. Have we hit bottom yet? We're not sure. So what we'll do with members later on today is review the weekly and monthly charts to identify, do we have a bottom yet on AMX? And is it safe to go putting our foot in the water? Now, stochastics are very mature, as is the RSI. Note how both have higher lows now put in on each. Now what we need are higher highs. We have a breakout on Ultimate Oscillator. MACD very, very mature. The chart is looking very good for a rally. Members, more to come. We're going to leave off with Alibaba. Alibaba broke out right here the week of May the 7th. It consolidated last week. We got a continuation move higher. I think our next price target is easily going to be 206.20. After that, the sky's the limit. We'll probably head up to 220 per share. So considerable upside potential. Members will talk about a trailing stop loss order on the week ahead commentary. And in fact, you know what? Since this is the last best stock chart, let's segue into the daily chart of Alibaba and kick off the week ahead commentary. Okay, members, let's begin with this very, very tight trading range here. We talked about this last week. We had an ever-tightening pennant formation, and we broke out on Friday on volume. Why does that matter? It matters because